Hello guys and welcome to a new video here on the channel. Today we have a new Ethereum price prediction. Ethereum has recently fallen in price, however experts claims that it could rise as high as $2,400. Let's get started. Ethereum price made a lower low on June 22, plunging below the $1,732 mark recorded amid the May market crash. While ETH price action followed the leading cryptocurrency as it faced recent negative news headlines, including China's ban on digital assets, the second largest crypto is heading for a swift recovery. Ethereum price bounces back from free fall. Ethereum price fell in tandem with the leading cryptocurrency yesterday and proceeded to record a new low at a level not seen since March at $1,700. Ethereum has broken down below the symmetrical triangle pattern on the daily chart that started forming on May 20. While the chart pattern indicates that ETH is indecisive, a break below the lower ascending trend line on June 18 confirmed that it was at risk of heading lower. Ethereum price has plunged below the critical demand barrier that extends from $1,939 to $2,143 but has now managed to sustain trading above the 200-day simple moving average, SMA, that currently acts as significant support. Further, Ethereum was also saved by a buy signal presented by the momentum reversal indicator, MRI, on the June 22 daily candle, indicating a trend reversal. Adding credence to the bullish thesis is the fact that this was a doji candlestick, giving the impression that ETH is expecting to reverse a period of underperformance. Currently, Ethereum still has a few resistance levels to reach before overcoming the prevailing bearish trend. While ETH has been able to trade above the 200-day SMA, and the lower band of the demand zone, the asset needs to target and trade above the $2,143 resistance level to confirm accelerating interest. Should Ethereum price be able to hold above the demand barrier as support, bullish investors can expect ETH to target the ascending trend line of the symmetrical triangle, generating a 19% rally from the current price, and the 27.2% Fibonacci extension level at $2,422. If ETH bulls lift prices higher against the overpowering distribution of the sellers, speculators could expect Ethereum price to tag the 100-day SMA at $2,500 as the next bullish target. However, if selling pressure continues to materialize for Ethereum, it could retest the 200-day SMA as support before ETH loses further momentum to revisit the May 23 low if the bears manage to ruin the bullish outlook. Before we get into another price prediction, please subscribe to the channel. Ethereum price respects pivotal support in a tricky tape. The positive response of Ethereum price to the outstanding support framed by the 200-day SMA at $1,878, the 2020 rising trend line at $1,793, the 61.8% retracement of the March 2020 to May 2021 advance at $1,730 and the May 23 low of $1,728 created a hint of optimism for enthusiastic ETH investors and short-term speculators. Adding some comfort is Ethereum price closed yesterday with a doji candlestick pattern on the daily chart, showing indecision on the side of both ETH sellers and buyers. It could also represent a reversal point for the decline or the beginning of a consolidation range. Nevertheless, the doji pattern communicates that the early selling pressure was matched with spirited accumulation as the day progressed into the close. The Ethereum price bounce and resulting doji pattern is a marked improvement for the smart contracts giant, and today's follow-through, if it holds, is a constructive development. Still, they do not confirm a viable low has been printed. Today's failure at the February high of $2,041, a recognizable level of resistance and support for the last few months, reveals the technical hurdles that await ETH if the rebound gains traction. Ethereum price needs a daily close above Monday's high of $2,259 to confirm a meaningful low has been established. ETH investors could target the symmetrical triangle's apex at $2,716 and the declining 50-day SMA at $2,815, generating a 25% profit for timely speculators. A daily close below yesterday's low of $1,700, magnet effect of round numbers, would confirm that the ETH selling pressure has not been exhausted. The digital asset may fall to the 2018 high of $1,419. Thereby ensuring an oversold condition on the daily RSI. A test of the 2018 high would represent a 28% decline from the current price. Before we end the video, let's have some news on Ethereum. This is how one Ethereum trader lost $3 million. A trader just learned the hard way that it's pretty easy to lose $3 million in the volatile world of the crypto options market. The Ether put option seller took a large bet against a sharp drop in the cryptocurrency and ended up booking a massive loss on Tuesday as the token powering Ethereum's blockchain tanked to a 3-month low of $1,700. The market moved just enough to force the trader to take a loss by buying back 5,000 contracts of the December expiry $2,560 put option sold earlier this quarter. Gregoire Magadino, CEO of options analytics platform Genesis Volatility, told CoinDesk in a Telegram chat. The trade looks to have yielded a loss of over $3 million. A put option gives owners the right to sell the underlying asset, in this case, Ether, at a set price on a certain date. Holders of the option make money when the price falls below that strike price and are implicitly short the asset. Conversely, sellers of the option benefit only when the asset trades above the strike and are implicitly long. The Ether options trader likely sold the $2,560 puts during the bull run, expecting a continued rally to last at least until the end of the year and thus a steady drop in the options price. Ether peaked above $4,000 on May 12, however, and fell to $1,700 on Tuesday, boosting the value of the $2,560 put and bringing sharp losses to the seller. The trade was executed and squared off on Deribit, the world's largest crypto options exchange, where one Ether option contract represents one ETH. Data from the exchange shows the trade as it occurred. The number of open positions in the $2,560 put expiring on December 31 saw a tenfold increase to more than 12,000 contracts in the 4 weeks ended May 12, when Ether prices doubled to over $4,000, and fell by 5,000 contracts on Tuesday. Calculating the loss. The short position that was squared off on Tuesday likely saw around a $3 million loss. How so? Due to data limitations, the exact price at which the trader sold 5,000 contracts of the $2,560 put is not available. Magadino, however, recommended using the put option's average price of $447 observed between mid-April and mid-May as the entry price for a profit and loss calculation. It's probable that the trader kept selling small quantities as Ether moved higher during those 4 weeks. So, the seller likely received $2.235 million in premium by selling 5,000 contracts at an average price of $447. Those contracts, however, were repurchased on Tuesday at a much higher per contract price of $1,080, amounting to a total outlay of $5.44 million. Essentially, the trader sold puts at $2.235 million a few weeks ago and then repurchased them for $5.44 million on Tuesday, netting a loss of over $3 million. That amount may seem heavy, but the trader likely did so out of fear the position would bleed further losses. The put's value began rising as Ether fell below $2,500 last week and surged to $1,080 during Tuesday's early U.S. hours, when the cryptocurrency itself dipped to $1,800. The short position was squared off when Ether was near the lowest point of the day. Thanks for watching the Ethereum price prediction here today.